a lot of people sort of use brand reputation in the same sense. The way that we think about brand and reputation is brand is what the company owns, and reputation is the perception with the stakeholders. And in a free society, we cherish the idea that people are allowed to hold their own opinions, share their own opinions. And I suppose that is part of what we call the coming reputation economy, is that these opinions are starting to count more and more. The core of reputation is an emotional bond. And we're saying that from the assumption, and also we've tested this with research, is that it's this emotional bond that drives people's behavior. No organization is an island, and every organization needs cooperation, supportive behaviors from a number of stakeholders to be able to succeed. And if we need those kinds of behaviors, then what we found is you need to build that emotional bond that people have with people, and we measure that by asking people whether they admire a company, trust a company, respect a company, or have a good feeling about a company. We ask people to give a rating, and that gives us then what we call a pulse score. People do find out about companies in different ways. They have direct experiences, which usually count the most with what your perceptions are, and also how you form that emotional bond. So if you go to a company and you go to a retailer and you buy something and it's faulty and you go back and you want to exchange it, then you are bound to have a direct experience of that organization, and those direct experiences are the most important aspect of what drives this emotional bond and the perceptions about a company. Then there are the formal communication of the company, which is the branding, the PR, all of that kind of stuff. That is important, but out of the three ways that you can interact with a company, the least important. And the third one is third-party influences. What you hear about the media, what people say at the dinner table, over the braai, what you may read on Facebook, etc., influences how you perceive the company. And as I said, the important thing about this is that ultimately it influences stakeholder behavior. It drives such things as whether people want to come to buy, whether they want to work for you, whether they want to invest in the company, whether they would be proud to be a supplier and do their best rather than do the minimum. And this ultimately influences business results. In measuring companies' reputation, if you plot that against share price, you know that over time, a good reputation filters through to share price. Companies with strong reputations find it much easier to recover from a crisis. King 3 is talking about a reputation is the most important asset of a company, and that it is the responsibility of the board to protect that asset. Why do we talk about a reputation company, and is that something fundamentally different from the reputation economy? And is that something fundamentally different from what we had in the past? Well, I suppose not necessarily fundamentally different, because people had opinions about companies all along, but there are some trends that are worth noting. The one is that people are highly connected. So if someone has a bad experience somewhere, they are going to write it on Facebook, and 200 people read it, and that is information that is now flowing around freely in a way that wasn't the case 10 years ago, 20 years ago. People do have choices. So if you don't like one petrol station, you can go to another one. If you look at what drives people wanting to work for a certain company, is typically first and foremost the reputation. Because you know that if you work for a company, you put your name to a reputation and you become one of them. And most of us, quite rightly, are asking the question, do I want to be one of them? Obviously, media still plays an important role. So I suppose the first really important bit about this reputation economy is information is flowing freely. People have more and more of a choice who they're actually cooperating with. With this network support comes a real financial impact. If you look at our research on this network support, on this reputation, we know that there is a clear statistical relationship to price earnings, to market and book value, to long-term profitability, and I suppose also to certain market risks. Fundamentally, there are 7 dimensions of a company that drive this emotional bond. Products and services, whether the company is innovative, the workplace, governance, citizenship, leadership, and financial performance. And what we find over time is that the importance of those is changing, and that is one of the things that why we're doing this research every year, is because we want to understand what is important for people about companies, what sort of builds or destroys that emotional bond. So fundamentally, we want to find out how do these aspects of a company influence that emotional bond, and how does that filter through to these supportive behaviors. There is a sort of a vague correlation between familiarity and how well companies are doing. So if you're a mining company and you're not in people's face all the time, one of the things that we were interested in is how perceptions are formed, and what we found is the main source of information that people have is from mainstream media, then from advertising, from a direct experience. The third one is a direct experience. The third one is really the sort of dinner talk, what people say in your circle of friends, acquaintances. Then social media, other online media, and something that people have maybe written on social media about the company. Now, the one thing that's interesting about that here, social media from a point of view of how much people know about how they form an opinion is not that important here. But if we go to the next slide, you can see that social media, though, has the strongest influence in shaping that opinion. So if you hear something from your friend on Facebook about an experience that they had while shopping or buying something or working somewhere, that really has a much higher likelihood of influencing people than other forms of media. Here are the companies that we already had surveyed last year and have surveyed this year again. And what you're seeing is a drop across the board. That's also what we're seeing globally. So there is a general erosion of that emotional bond that people have with private sector companies. And there is, so that's an issue around the world, and I think a really important one. And I think it's particularly important in South Africa. Because in South Africa, those big companies of the private sector have always given us people a sense of stability, and that we have this strong private sector that sort of carries us through thick and thin. And that pillar of society is starting to weaken, and it's worthwhile to look at sort of where it has weakened. So the 2 most important aspects that drive people's emotional bond is products and services and innovation. And that is also a South African anomaly, is that when people feel times are uncertain, they are asking, are we still there? Are we still leading edge? Are we still there with the rest of the world? Well, in other parts of the world, people, especially during the financial crisis, were sort of saying, is governance okay? People in South Africa were saying, are we innovative? So it's an interesting sort of national psyche that we're seeing there. The biggest shift from last year to this year was that leadership has dropped dramatically in importance. Last year, people pinned their hopes on corporate leadership to take us forward, and that has dropped by a quarter, which in our world is a massive drop. So this is how the importance of those dimensions has changed, and this is the year of the financial crisis, where, as I said, in South Africa, suddenly products and services really important, and we are at a sort of similar situation again. Well, over those years, innovation was not that important. Suddenly it's becoming important again. And you see this sort of rise in the importance of leadership, where people said, yes, in case of emergency, we can trust our corporate leaders that they step up to the plate. And it's become from one of the, almost as important as products and services, which is typically the most important, to the least important. People are now looking much more, not just for the products and services when they judge a company, they're also looking more at the whole company when they make a decision of what to buy. So, I mean, the thing that you need to look at when you look at those things is, with each company, the importance of those dimensions is different. And that is a really important lesson for South African corporate leaders, is that if you want to get that sort of supportive behavior, you need to establish yourself in a constructive way in that socioeconomic environment that you're operating in.